It's 30 a.m. right here in Lagos, Nigeria, the third trading week of March. Welcome. Let's get to the top stories now that get you ready for that trade. So it's a profitable week after all. Oil prices opened about 1% higher today after the United States vowed to keep attacking Yemen's Houthis until the Iran allied group ended assaults on shipping there. We see a big move up. Brent, 1.02% this morning, $71.30 a barrel. U.S. WTI not able to get back above that $70 psychological level, still holding on at $67.90 a barrel, but a bigger 1.10% uptick. The oil prices rose slightly last week, snapping a three-week losing streak caused by concerns over global economic slowdown driven by escalating trade tensions between the U.S. and other nations. Analysts expected the U.S. economy to grow slower than previously anticipated due to tariffs imposed by the Trump administration on countries including China, Mexico, and Canada. Oil demand, that was expected to grow at a slower pace than previously expected, while supply from the Organization of Petroleum Exporting Countries and its allies, as OPEC Plus, has seen been higher than forecast. So a lot to still watch out for in the oil market. To other stories now. Over 2.1 trillion naira has been recovered in debtors so far. This according to the Asset Management Corporation of Nigeria. In a statement released by the agency's head of corporate communications, Mr. Jude Wauzo, AMCON says the amount retrieved comes despite its challenges since inception. He also stated that AMCON currently has over 2,000 cases in court, as some of the corporation's debtors owe nearly 5 trillion naira, adding that the debtors who borrow these monies do not use it for the purpose for which the money was borrowed. Meanwhile, AMCON has reaffirmed its commitment to recovering the 227.6 billion naira owed by Arik Air Limited and its founder, Sir Johnson Arumehide, amid ongoing legal battles and allegations of mismanagement. Latest data from the Central Bank of Nigeria shows that direct remittance inflows into Nigeria total $1.92 billion in 2024. This amount reflects a slight decline from the $1.98 billion recorded in the previous year. Despite this dip, remittances continue to play a critical role in supporting household income and foreign exchange liquidity. The data also revealed that January and February 2025 have already recorded $180 million in direct remittances, with $125.6 million in January and $54.4 million in February, suggesting a cautious start to the year. Analysis of the CBN data showed that the year 2024 began with relatively strong inflows of $138.6 million in January. However, February saw a dramatic decline to $39.1 million, marking the lowest monthly figure of the year. This drop was likely influenced by seasonal factors and economic uncertainties affecting the diaspora. March saw a modest recovery, with remittances rising to $104.9 million, signaling a gradual stabilization. All right, let's get a check on the economic expectations for this week. Inflation for February, we're expecting that from the NBS. We see January, that was about 24.48%. Will it be higher or lower? That's for the rebase data. So we're looking forward to that February inflation. That's for Nigeria. Then an NTB auction, that's for Wednesday. The DMO is to offer 800 billion naira worth of new maturities. The NTB auction, that's for this Wednesday. So I'm guessing investors will be watching out for this and other matters coming up this week. Well, the Securities and Exchange Commission has announced plans to publicly shame capital market operators found guilty of violating market laws and regulations. The Commission, in a statement on its Instagram page, says the names of erring operators would be published in its Name and Shame Journal as part of a broader strategy to enforce compliance and maintain integrity in the Nigerian capital market. It stated that the measure would be in addition to existing sanctions and penalties outlined in the Investments and Securities Act 2007. And interestingly, we're going to be speaking to Dr. Timi Gama. We're going to be speaking to him after this break to find out what to expect. That's in a moment. Just stay with us. And in recent years, Nigeria's capital market has evolved into a significant driver of economic growth, attracting both local and international investors. However, as the market continues to expand, ensuring that investors' rights are adequately protected is more critical than ever. The need for strong investor protection mechanisms has become a focal point in fostering market trust, enhancing transparency, and encouraging further investment. Well, joining us to discuss now, we have Dr. Imomotimi Agama, as the Director General, Securities and Exchange Commission. Joining me from our Abuja studio. Great to have you on the show, sir.
Thank you for having me, Daddy.
So definitely a lot to unpack today, but, break it down for me. What will you say are the key regulations, governing investor protection in Nigeria's capital market in, 2025? I know we've seen so many changes, coming from the previous years, but talk to me about what's happening in 2025 and how effective, are they at protecting investors in Nigeria?
Well, thank you again. This is a great opportunity to speak to Nigerians and indeed international investors that are interested in investing in the Nigerian capital market. Investor protection is more or less a holy creed for the Securities and Exchange Commission. The Investment and Securities Act 2007 clearly spells out the objectives of securities regulation in Nigeria. And for whatever it's worth, investor protection and market development are the twin objectives of that law. And indeed, for any market to succeed, it is important that investor protection is at the front burner for any market to succeed. Nigeria is not an exception. The SEC in the year 2025 has decided, to say clearly to everyone that is involved in this market that that sacred responsibility that we have been given by virtue of the appointment of Mr. President Bola Ahmed Tinubu, it is important to state clearly that every investor in Nigeria is under the cover of the SEC as long as the person operates within the Nigerian capital market. And so the year 2025 is a year where we will say that there is zero tolerance for any activity that does not fall within the laws of the Investment and Securities Act 2007. I'm sure it will interest you to note that the National Assembly has passed the new Investment and Securities Act. We are earnestly waiting for the president's assent as it's going through administrative process to get to the president to get it assented to. And that alone also signifies our intention to make sure that everyone that is investing in this market or intends to invest in this market has a cover. That cover runs across so many lines. Particularly, let me mention that Ponzi schemes will no longer be a place where people will be fettering, where people will be interested in, because the penalties in the new ISA, towards people that are engaged in Ponzi scheme is stiff enough to deter them. But beyond all of that, we're emphasizing that compliance is important and disclosure is also important, being the cardinal objectives of securities regulation. And so everyone that is in this market intends to be in this market and we want to collaborate with us in developing the market knows very well that investor protection is at the front burner. We are going to, as much as possible, deal with all of these situations within the ambit of the law. And so what you have been seeing most recently by the revocation of licenses, by the suspension of operators, and of course, by our follow-up to operators that are not registered with the SEC, it's only a tip on the iceberg as to what we intend to do in the year 2025. All right. We believe strongly that a protected investor is a powerful investor. So,
right.
and we will do everything within the powers of the SEC and the Nigerian law to make sure that we deter any unscrupulous persons who are involved in trying to defraud Nigerian investors.
Right, and definitely we know that from 2024 coming into 2025, it's definitely not been easy, being an investor, in any market. But now we're seeing this new announcement, from your commission about naming and shaming, publicly capital market operators found guilty of violating market laws and regulations. Why is the SEC taking this approach, at this time? And is it getting harder, to get compliance, from most of these players in the market?
Yes, like you are aware, the world over, things are changing. And so we also have to change with the things that are changing the world over. As much as possible, we want a market that everyone can trust, a market that everyone is confident with, a market that has integrity, a market that is transparent. That's the only way we can encourage domestic investors and indeed international investors into this market. But while we're doing that, we also want to put responsibility on the operators in this market to say, look, you have a responsibility, you have a fiduciary responsibility to the investor and to the Nigerians as a whole to make sure that what you are doing is something that is properly done, that is within the laws of this country. And as such, you do not have any intention to misrepresent the Nigerian capital market, neither do you have an intention to defraud unsuspecting investors in this market. We believe strongly that with a population of 220 million and above, Nigerians deserve the best capital market for which we can develop our economy, we can grow the economy, and we can redistribute wealth to everyone. The capital market is a place where opportunities does exist. But for that opportunity actually to be captured properly and for people to enjoy the opportunities we are speaking to, it means that the market operators themselves, and including the regulators as ourselves, must do all that is within our powers to show to the people that we are there to protect them. And by so doing, we are going to bring more persons into the market, and those persons will have the benefit of enjoying the gains of the market. The market has been seeing, some very, very positive results most recently. We believe that this is just the beginning of the good things that will happen in this market. But before that happens, we also need to give confidence to the investors to say there is no market operator that indulges in unscrupulous things that will be let go. So it's important that as a form of self-regulation, they are aware beforehand that if you do what is not right, the SEC will bring you out to the wall to say that you do not have character. Because the very, very ethos of regulating or of registering a securities market operator is in the principle of the fit and proper persons test. And fit and proper persons test means that you satisfy all of the requirements that has been laid down in the ISA and in other regulations that the SEC has brought out to make sure that this happens. Disclosures by public companies will be very, very essential, making sure that the investor has enough information to make decisions. If information is not provided, then that will be against the rules and regulations of the SEC and indeed the Investment and Securities Act. So clearly for us, it is getting people to understand that there is no hiding place anymore for anybody that has an intention to defraud Nigerians and to defraud anybody that is investing in this market.
Right, and definitely we've got a couple of results from listed companies so far in the first quarter of 2025 for their Q4 earnings and 2024 full year earnings. But from what you've seen so far from these results, how transparent are listed companies in disclosing financial and non-financial information to investors? Are you impressed with what you've seen so far?
Well, the word impressed may be very subjective. As a regulator, my function and my responsibility is to make sure that I provide a level playing field and an enabling framework for every market operator, every public company to excel. We will do everything within our power to encourage, to assist, to advise, and of course, make sure that people meet compliance, because that is very critical. And that's why we have the department called the Financial Standards and Corporate Governance Department at the SEC. We are strengthening that department to making sure that analysis are done swiftly, promptly, and providing feedback. And where we find that there is culpability in any form with the companies, we certainly will do what we need to do as regulators. The Nigerian government, the president has empowered us to do these things, and we must do it for the benefit of Nigerians, and that is why we are there.
All right, so, definitely these measures, to ensure compliance, with disclosure requirements and, violations so far, even though sometimes we see, some of these stringent measures to protect investors, but we still find out that, some of these players still find ways, to take advantage of the investor. Do you think these measures will get more stringent, going forward in 2025, to protect investors?
Yes, the old proverbs about Kennedy bed. If the hunter, learns to shoot without stopping, the Kennedy bird will also learn to fly without passion. For us at the SEC, no matter how they go about it, we are going to make sure we go after everyone that does not want to do the business the right way. And so, but in all of this, one of the things we will do more at the SEC this year, 2025, is to educate more persons, is to provide financial literacy, is to engage more, is to discuss with stakeholders. So we encourage everyone who has information to share with the SEC in strict confidence, and we'll do what we need to do to making sure that everybody falls in line. It's a responsibility that we have been given as a team at the SEC, as a board. The board is giving us full support to making sure that this happens. The Minister of Finance, the Ministers of Finance, that's the CMA and the Minister for State, are fully behind us because we've been given a target. The target is make sure that this market works. The Nigerian capital market from now on is a market that will be a solutionist market, a market that provides support to government policies, a market that provides support to Nigerians in creating and building wealth, a market that provides support for investors to know that clearly that their monies are in safe hands. And of course, they have somebody helping them to watch over the situation as we move on. So we believe clearly that it's an opportunity for Nigerians to come back to the market and to enjoy the benefits of the market so that we can, as a market, provide solutions to the myriad of problems, especially in regards to infrastructure development and all of that, in order for us to have a better economy and, of course, meet the renewed hope agenda of Mr. President.
Right. And Dr. Gama, I know one major issue that's plagued many markets in years, so far is you find out that some investors that have information before the wider investing public, and they're able to, front run the market. So what mechanisms are in place to detect and prevent insider trading, market manipulation, and other forms of market abuse this year?
Yeah, again, thank you so much. The SEC and the African Development Bank are in cooperation to provide a world-class surveillance tool for the SEC and the Nigerian capital market. That certainly will happen in the second quarter of the year 2025. That is very, very important to us because it helps us to electronically detect manipulations, front-running, and fraud in the market abuse. All of these, tools will be available for us to be able to do that in order to keep this market safe. Market manipulation is a global issue, and for us at the Nigerian capital market, we are taking it very, very seriously. We are training our staff to be better at detecting those frauds. And for your information, we are also, moving towards employing predictive and generative AI solutions to be able to achieve this. So we are not resting on our hours, And we are getting the support that we need to be able to do so, but we also need other support as much as possible. As Nigerians, we all have a responsibility to do what we need to do, provide information, support each other in making sure that our market grows bigger and better, and of course, it is accepted, nationally and internationally. So be rest assured that the team at the SEC, as appointed by Mr. President, is up to the task, and we'll do our best to achieving the goals that Mr. President has set for us.
Right. So definitely, I know one major headache with SECs all over the world right now is cryptocurrency regulation, digital currencies and all of that. And we see in Nigeria now, we're starting to get some, companies operate with licenses, if you're an virtual asset provider. What are you seeing, so far when it comes to, regulating that space in Nigeria? Is it getting easier, for you, or is it still quite, tough, getting a grasp of that industry?
Well, I'm sure you are aware that I'm a very, very interested party in the digital space. And so things that relate to the virtual asset service providers and digital asset space are very, very important to me. It is very important to know that it's a space that you cannot run away from. You can also see that internationally it's beginning to gain more attention. The United States most recently just provided a reserve for digital assets, for cryptocurrencies. And here in Nigeria, we had long started this business as far back as 2020, where we made the clarification and definition of what we are speaking to. We have moved over to creating regulations on virtual asset service providers long before now, and subsequently, in the year 2024, we went ahead, to introduce the ARIP and the ROI, which is the regulatory incubation and the accelerated regulatory incubation programs. These are means and ways to be able to deal with this animal. Or I call it an animal, I call it, people say it is an amoeba because it is almost shapeless. But why do we need to do that? We need to understudy exactly how the animal behaves in order for us to be able to provide strong regulations, and that is happening. We had issued a new regulation, which is actually on exposure last year also, so that people can see the evolving nature of the regulation in the virtual asset service provider space. Will you say it is getting more difficult? No. Will you say it is getting easier? No. But what is important is that at SEC, what we are doing is to add more knowledge to ourselves in order for us to be stronger and better, because it is important that we are. And understanding the market is critical. Understanding the concept of cryptocurrency, digital assets, and everything under that space is very, very vital and important. It is, very costly, but we are doing what we are doing. But beyond all of that, what is even more important in the Nigerian space is the collaboration between the agencies of government that are, involved in it. The Office of the National Security Advisor, the Central Bank of Nigeria, the FIROS, the NFIU. These are critical stakeholders that are collaborating and cooperating to making sure that we provide.
All right, we definitely see some freezing there, but we did see the Director General there trying to, all right.
Our youths anyway, and so the youths are more involved in this. And Mr. President is very concerned about the youths and about what they do, and so it's important that we provide a level playing field for them. We have done what we call major regulations and major licenses. And as we move forward, definitely we are going to provide more information to making sure that nobody is actually stifled and the level playing field is provided for everyone to operate, and the ones that are qualified without any inhibition.
All right, definitely a lot to look out for in 2025. We see the first quarter almost over, going into the second quarter now. But thank you so much, Dr. Imomotimi Agama, Director General, Securities and Exchange Commission. It was great having your perspective today. Thank you so much.
Thank you for having me.
All right, so now on to the next conversation. We see the Nigerian retail and consumer landscape is undergoing rapid transformation driven by technological advancement, shifting consumer preferences, and evolving economic conditions. As Africa's largest economy, Nigeria presents unique opportunities and challenges for retailers, brands, and consumers alike. In 2025, several key trends are expected to shape this market, from the rise in e-commerce and digital payments to the growing demand for sustainable and locally sourced products. Now, let's explore significant retail and consumer trends to watch in Nigeria for 2025. Join us now. We have Professor Uchenna Ozozo, Academic Director, Africa Retail Academy, LBS. Great to have you on the show, sir.
Great to be back. Thank you, Ladi.
So, definitely we know the Nigerian consumer, coming from, if you want to look back as far back as maybe 2023, 2024, and now into this year, it's been quite tough for the consumer. Talk to me about trends, consumer trends you're seeing so far in 2025.
Indeed, it's been challenging. We've had consumers with more empty pockets than before. We hear of rebased inflation, but our pockets haven't been rebased. We've had a lot more brand disloyalty than ever before, and a couple of other things. In fact, I like to say that the Nigerian consumer is a moving target. It's not easy to keep the Nigerian consumer in one place. But having said that, there are three trends that we see that are demonstrating the resilience of Nigerian consumers. I'll start with the first one, which is about the adoption of artificial intelligence. It's very interesting to note that the adoption rate of artificial intelligence in Nigeria is higher than the global average. A lot of consumers and businesses are using artificial intelligence for price comparisons, for product search, for engaging at the point of purchase, for copywriting, for creative advertising. Even small indigenous businesses are creating local solutions with the use of artificial intelligence. So this is an opportunity for personalization that we are beginning to see as consumers hold brands more accountable. The second trend that is of great interest is the one that has to do with sustainability. So Nigerian consumers are not just looking at quality and value for money before they buy. They are beginning to ask about how sustainable, how eco-friendly the packaging is of what they are buying. And we've seen some recent initiatives in this direction. Lagos State, for example, is requiring of retail supermarkets to not sell single plastic bags, single-use plastic bags, and rather to replace them with reusable ones. So that shows some interesting trends. So 86% of Nigerian consumers, according to a recent survey, have moved in the direction of buying brands that address social causes that they are interested in. So this presents an opportunity for businesses and markets to rethink the way they produce their products and services, to partner with brands that are more conscious about sustainability. The third trend that we find very interesting is about social commerce. Social commerce is buying through TikTok, through WhatsApp, through Facebook. We are seeing that in Nigeria is leading Africa in the social commerce penetration rate at about 70% that is expected at the end of this year. In 2024, social commerce grew by almost 38% in Nigeria. And what is it that people are buying through these channels? Footwear, apparel, electronics. So we see some interesting trends, clear demonstrations of resilience, opening up new opportunities that brands will have to consider in this year.
Yeah, that's quite interesting because I also see the likes of some brands there, international brands or an international platform that's selling a lot of goods to Nigerians right now. I'm sure a lot of people know Temu, and I'm seeing that trend, growing. People are, trying to get, some of their the things that they would normally get from here, through that website. And I find that quite interesting because it almost seems like that company could put some businesses out of business, so far. I don't know if you're conversant with that website.
Yes, so there's indeed a great increase in that direction of engaging virtually to grow this. And I think that the brands that are using social commerce, which makes it very interesting, are also consumer to consumer. So it's not only, should we say, producers or retailers or distributors who are trying to sell to consumers using this channel, but we're seeing consumers who are selling to other consumers, selling reusable items, selling second-hand items, selling new items. And I think this is a great opportunity because consumers are going to be able to increasingly bypass retailers and distributors to get certain categories of products and services that they are looking for. So it's all an exciting opportunity that is worth exploring more deeply.
Right, and you also mentioned this ban on single-use plastic and nylons, and I think I've also noticed, some consumers, going into most of these supermarkets carrying their own nylon bags, at this point, and I find it quite interesting, that's coming up in Nigeria right now. But is there any risk that this might shift to more costs, for the consumer? With this ban on single-use nylons and plastics?
Well, I believe that it's something in the right direction because we really need to care more about climate change. As I mentioned earlier, about 86% of shoppers in Nigeria are pretty concerned, a lot more concerned about climate change than they were before. It's an increased cost if they have to carry their own bags. But if you look at it overall, it's also an opportunity to move from waste to wealth. If everybody is more conscious about managing waste carefully and not reproducing waste that we don't use, and thinking of ways to recycle that waste to make it reusable, I think it's something that will benefit the entire society.
Right, and yeah, there you have it, people taking in their own carrier bags at this point into the supermarket. But what role will convenience, affordability, and value for money, what roles do they play in shaping purchasing decisions in 2025?
Very good question. So one interesting trend we've observed is how increasingly demanding Nigerian consumers are. You can imagine a Nigerian consumer who earns the value of what he earns, can afford him or her a bicycle. But in terms of what they are demanding from brands, they want, their value expectation is as high as what it would take to buy a private jet, for example. So Nigerian consumers love to high value at the least possible cost. Now, this puts some pressure on brands. Yes, value for money is important. Convenience is important. But what our study is showing currently is that Nigerian consumers will only be willing to pay if they trust that that value for money and that convenience is being provided by a location, a retail outlet, or a point of sale that appeals to their trust expectation. So trust and trust building is becoming a bigger issue. And supermarkets are taking the lead in terms of generating and building trust. We find that for every visit that a Nigerian shopper makes to a shopping mall or even to an e-commerce platform, they have probably gone to a supermarket 8 or 9 times. And it's not just because those supermarkets are closer to them, but there's some kind of relational element that goes into buying from those particular locations. Trust building is becoming key. And we see that there are 3 ways that brands can grow this trust this year. One of them is about being more transparent about their pricing decisions, especially when they want to communicate price changes. The other one is about being consistent in service delivery. Nigerian consumers want brands to walk their talk. And then the other one is about customer centricity. The more brands can be customer centric, the greater the chances that they will build on this trust, which is becoming increasingly important in the Nigerian market.
And, as an import-dependent country, we did see the devaluation of the naira, how that impacted how much, Nigerians import. At this time, we're still seeing the naira, trading quite stable, from some part of 2024. And we still, I don't know if that mantra, that Buy Nigeria mantra is still top of mind right now. But talk to me how retailers can leverage that buy local movement to build consumer loyalty, support, and the local economy. How can they come to the rescue of, those Nigerians that have that taste for international goods, but can't seem to afford it anymore with the devaluation of the naira?
Yeah, very good question. So it will interest you to note that even though in Africa, if you look at how African consumers are behaving, the top 10 brands that African consumers love the most are all global brands. When you compare that finding with Nigeria, you see that there's an increasing appetite for local brands, even though Nigerian consumers continue to find global brands interesting and usable. Because of the inflation and exchange rate issues. But there's also the phenomenon of the creative industry, the fact that a lot of our celebrities are using locally made items. And this is making the younger ones to aspire to want to use those items. Now, this presents an opportunity for those in retail. To begin with, it's an opportunity to source locally. It's also an opportunity to be different. A lot of retail outlets haven't quite sorted out what makes them different. They position their retail outlets as a mere location to showcase other people's products and services. But imagine a situation where particular retail supermarkets go into private labeling and then through this, showcasing their own indigenous brands. That would be a clear differentiator in the market. So we see a great opportunity to deliver this through partnerships. Partnerships will go a long way in sourcing for local producers. We also believe that this will grow Nigeria's manufacturing landscape, and we believe that there's even an opportunity for export coming from these. So in other words, there's a great opportunity for retail players to consider how to be different, to dare to be different, by considering blending their mix of foreign products with locally manufactured products.
Yeah, definitely. Looking forward to that becoming a real thing, Buy Nigeria, and we all, will continue with that mantra. But we're expecting the February inflation data that will be coming out sometime this week. We might even get it today, at this point. But talk to me about how retailers can navigate economic uncertainties while, maintaining consumer confidence.
Yeah, so really, for retailers to be able to drive consumer confidence in the face of uncertainty, they need to go back to their strategies, their growth strategies for the year. Growth is not just about increasing the number of outlets or going to new locations. Growth is about improving our standards, our processes, ensuring that we have processes that will enable us scale, that will enable us deliver consistent service at scale. And this is where the opportunity is, using technology, also improving on the quality of retail standards, personnel policies. A lot of retail outlets are suffering from pilferage, from not being able to keep talent, and there's a great opportunity to rethink their talent management strategy. All these things internally are the critical ingredients of growth, beyond just adding outlets. And so if the retail outlets take good care of their internal processes, chances are they are going to be stronger in delighting the target consumer and therefore improving consumer confidence that tends to be battered nowadays.
Right. Definitely hoping the consumer in Nigeria gets more confident in 2025, and maybe some pockets also get rebates. That'll be very nice. Thank you so much, Professor Uche Naozo, as Academic Director, Africa Retail Academy, Lagos Business School. Thank you for coming on today.
Thank you so much. Have a wonderful day.
You too. All right, we'll take a moment now.
From one hotel room to another one. This is the game changer seat. Fly Emirates. Fly better.
In every show, we bring you closer to the fastest growing movie industry in the world. From the making to the premiere. Get up close and personal with the stars and industry captains, plus reviews and much more. Nollywood Uncut, every week at these times.
Just close the doors, and you're in a world of your own. Travel is not just about the destination, it's also about how you get there. Fly Emirates, fly better.
All right, it's time to find out what's happening in the global economy and the expectations for this week. What's going to sway investor sentiment? We'll find out now. John McCraw has the details. Join us right here. Happy New Week.
Happy New Week, laddie.
Yeah,
I'm going to rebase your account.
Week.
I said I would tell you that.
Please rebase my pocket.
Yeah. Oh, your pocket?
Yes.
That's small.
Okay.
I thought it would be your account.
Okay, my
account. That's why you have
account.
more space.
Right.
Yeah.
So you rebase my account.
But you missed your chance.
Whoa.
Yeah.
Wow.
Once in a lifetime.
I'll try and get it again.
Good morning, everyone. Welcome to Global News here on Business Morning. We start from India, where the wholesale inflation has increased to 2.38% year-on-year in February, and that's up from 2.31% in January. This is because of elevated prices of some fruits, vegetables, and the data is released by the government today, Monday. Wholesale food prices in February rose 5.94% after a 7.47% increase in January. Vegetable prices declined by 5.8% compared to a 8.35% increase in the previous month. However, prices of potatoes, onions, and fruits saw a rise between 21% and 48% in February. Cereal also increased 6.77% compared to a 7.33% rise in January. Manufactured products, which make up about 64% of the wholesale price index, saw a price increase of 2.86% after 2.51% increase in January. On the other hand, prices for fuel and power fell 0.71% year-on-year, and that's compared to a 2.78% drop in January. And still on those economies, good news for China, where the economy showed a modest pickup for the first 2 months of the year, according to data published by the National Bureau of Statistics, as Beijing reiterates its plan to bolster domestic consumption. Retail sales rose by 4% in the January to February period from a year ago, compared to 3.7% year-on-year growth in December, and is in line with some estimates by economists. Industrial production climbed 5.9% in the first 2 months of the year from a year ago, slower than 6.2% growth in December, but faster than a 5.3% expansion forecast by analysts. Industrial output growth in the equipment making and high-tech manufacturing sector also accelerated, and it's supposed to be at about 10.6% and 9.1% on year-on-year, respectively. Fixed income investment reported on a year-to-date basis rose 4.1%, beating the 3.6% growth estimate by economists, a notable jump from the 3.2% increase last year. And Statistics Agency have attributed this improvement in economic activities at the start of the year to sustained effects from several stimulus measures, while flagging a more complicated and challenging external environment, insufficient domestic demand, and difficulties for enterprises in operation and production. And talking about stimulus, China is up for another stimulus, perhaps to make the numbers look even better, because they've announced a special action plan to boost consumption. This was announced on Sunday in a bid to prop up domestic consumption in the world's second largest economy. The General Office of the Central Committee, an office directly under China's ruling party, said that the plan was to vigorously boost consumption, expand domestic demand, and enhance consumption capacity by increasing income and reducing burden. And then this wide-ranging release also outlined other steps, such as taking multiple measures to stabilize the stock market, developing more bond products suitable for individual investors. And China's CSI 300 index and Hong Kong's Hang Seng index were slightly up on Monday, registering gains of about 0.1% just based on the announcement of this stimulus. So we can imagine what the coming days would look like. That's all if all other things remain equal, as economists will say. Let's move over to the United States now, where consumers lost $5.7 billion to investment scams in 2024, more than in any other type of fraud. And that's up 24% from 2023. This new data is from the Federal Trade Commission. Investment scams generally involve claims that a consumer will get a big return by investing in a hot new money-making scheme. According to FTC, most people, that's 79%, who reported an investment scam to the FTC, lost money, with the typical victim losing more than $9,000 on the average. And since FTC data is based on consumer reports of fraud, the true scope of investment fraud is likely much higher after factoring in people who don't step forward with their announcements and experience. Now, the United States President Donald Trump says that he plans to speak with Russian President Vladimir Putin on Tuesday, that's tomorrow, to discuss ending the war in Ukraine. According to him, a lot of work has been done over the weekend, and the plan is to see if they can bring the war to an end. Trump is trying to win Putin's support for a 30-day ceasefire proposal Ukraine accepted last week, as both sides continue trading heavy aerial strikes through the weekend, and Russia moved closer to ejecting Ukrainian forces from their Mount-O foothold in the western Russian region of Kursk. And they say they'll be talking about the land and talking about power plants, according to President Donald Trump, when he was asked about the concessions. He said that they have a lot, discuss a lot by both sides, that's Ukraine and Russia, and they're ready to talk about it, how to divide that, or dividing up certain assets. And from there we go to expectations for the week, and we tell you that FOMC decision is due on Wednesday. That comes as most nowcast models indicate that GDP growth slowing in the first quarter, with such as Atlanta Fed's GDP currently even pointing to 2.4% annualized contraction. And we know a lot of consumers in the United States have been citing fears of inflation and recession. It looks like it is overstating in the weakness, and survey data such as the S&P Global PMI points to a more moderate slowdown, though even the PMI data have fallen sharply to an extent that is consistent with a mere 0.6% rate. That is what will be expected. Also to be expected this week is in the UK. The Bank of England is expected to hold rates steady, having reduced its policy rate to 4.8% via a 25 basis point cut in February. And then also Japan, the Bank of Japan also is meeting, and they're likely to hold it. But let's stay on the UK now and see what has been happening and this expectation of holding rate. Juliana joins us. Juliana, good morning and welcome to the program.
Good morning, and nice speaking to you.
Same here. So amidst all of this trade war, we don't know what else President Trump will come with. It does seem like the uncertainty is forcing central bankers to just stay on one spot and see what's going to happen next.
That's absolutely right. As you know, Inni, a month is a very long time in central banking, but under the tenure of US President Donald Trump, it's even become more tense. So on Thursday, we are expecting the Monetary Policy Committee to gather in Threadneedle Street. As you quite rightly said, there was a 0.25% rate cut in February. We are anticipating that interest rates will remain on steady this week, and that is because there is so much uncertainty. We also got GDP data last week showing that the UK economy dipped unexpectedly by 0.1%. So this piles on so much pressure, not just on the central bank, but also on the government. We know that Chancellor Rachel Reeves came in on an expected high. There are so many issues with the Conservative government and the economy, but it just hasn't gone well for this Labour government, and already on top of the initial costs for businesses, which are going to be coming in with the NI and the employer hike next month, we're also expecting welfare to be cut and benefits to be cut. So I think Andrew Bailey, the central bank governor, is going to have a lot to contend with, but particularly I think the pressure is coming from the White House, from Washington. Of course, as we know, as soon as America sneezes, Britain catches a cold. So I think a lot of people are going to be on wait and see mode, but certainly I think the markets have already priced in that interest rates are going to remain steady.
Yeah, well, UK catches the cold first, Juliana. Other parts of the world also catches eventually. But, you know, the other time we're talking about defense spending, what all of this, you know, US cutting their spending and their support to Ukraine and all of that, and then Prime Minister looking for being the center of coordinating all of this. So I wonder if there's any updates on that defense spending that was also an issue, I think, last week or 2 weeks ago.
It was. So we know that, so in terms of the defense spend, this is all about, you know, the war in Ukraine, hopefully a ceasefire imminent, unexpectedly, but wonderfully for Britain. Sir Keir Starmer, the Prime Minister, playing a central role there, being very, very careful not to offend Donald Trump, because we know he gets offended so easy. But one thing that the entire House in the Palace of Westminster can agree with is that this boost in defense spending is significant. It's good. It's something that was needed even before the war. So I don't think that is necessarily going to, you know, affect Rachel Reeves' upcoming summer or spring fiscal statement. But there are so many other domestic issues on top of the geopolitical issues. We're also getting unemployment rate data this week, Inni, as well as retail sales figures. I believe consumers in the UK are beginning to hold back. It's not easy to spend your pounds anywhere around the world, Inni. I can testify to that. So it's going to be a busy week. All eyes are going to be on that Trump-Putin meeting, as you were teasing just before you crossed to me. But yeah, we're certainly on a wait-and-see mode, as we always do, Inni. That's our favourite saying in business.
Exactly. We'll wait and see, and this time our eyes are more you know, the direction of the White House to see what President Trump will do. Well, thank you so much, Juliana, for all of that.
Thank you so much, Inni.
All right, so Ladi, as usual, we're waiting and seeing the White House. And I know that tomorrow is going to be really hot. Everybody will be listening for what President Donald Trump will say. But I mean, should we start praying that President Putin's mind will receive peace? Because I mean, Ukraine has already agreed.
They've agreed.
You know, and
so
they've done their own concessions. Exactly. So it's Russia we're looking for. No wonder President Zelensky was behaving the way he was behaving when he was in the White House. It's true. I mean.
Well, let's see. He might maybe wear a suit, you know, this time, but we'll definitely.
That's not the core of the
watch
matter.
out for all of that. But let's expect more market volatility tomorrow. You know, with that,
in fact, from today.
Yeah, it might actually start today. So let's see how it all plays out. But I guess maybe we might see and wait. at some point.
And not wait and see.
Yeah.
Okay, all right.
Thank you so much, Edie, for the details there, what's playing out with the global markets that we track. But we're back again at 1 p.m. John McQuarrie will give you details of what's playing out with most of those markets that we track. Thank you again for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.